Well, the total value of commodities traded on AFEX commodities market dropped by 46% in the week of 16th of March to March 22nd to close at 1.8 billion naira. The number of contracts also dropped significantly. For details, Michael Martin, the portfolio manager, AFEX, joins us now. Good morning, Michael.
Good morning, Ini. Thank you for having me once again.
Yeah, you're welcome. Well, first, let's get a sense of activities in the market in the week under review. Could you take us through that?
So if you look at the table in front of you, there was significant decline in the total number of transactions that was executed on the exchange over the course of the week, with the total value traded on the exchange falling by 46% from around 1.8 billion naira to close the trading week at 0.97 billion naira. The total number of contracts traded on the exchange also fell by 60% from around 103,000 contracts to close the trading week at just over 41,000 contracts. The total number of deals also fell by 18% from around 118 deals to close the trading week at just 97 deals. We, however, saw a fair bit of positive market activity with the ACI and the AEI going up by 3.96% to close the trading week at 400.85, and also 0.66% with the AEI, which is the AFEX Export Index, to close the trading week at 159.95. With regards to the volume traded on the exchange, if you look at the table, the next chart in front of you, you would notice that generally with grains, there was a reduction in the total volume of contracts traded on the exchange. And that concerns maize, soybean, paddy rice, and sorghum. The only commodities where we saw significant market activity was with ginger and cashew, and there was little to no volume traded for cocoa and sesame on the exchange. With regards to the price, the top gainers for the week, the first of which is number one, maize. And if you're a person who consumes cornflakes or golden morn, I'm pretty sure that maize is of interest to you. It gained 4.40%, gaining 864 naira in the contract value to close the trading week at 20,552 naira per contract. The second commodity that gained in the week was soybean, which gained 1.57%, gaining 470 naira in contract value to close the trading week at 30,470 naira per contract. And lastly, we have ginger, which is a medicinal commodity and which at some point in time during the COVID-19 crisis was advocated for consumption, gained 1.33%, gaining 1,166 naira per contract to close the trading week at 88,527 naira per contract. However, we also had some commodities which lost over the course of the week, with the top loser being sorghum, which lost 3.55%, losing 671 naira into contract value to close the trading week at 18,195 naira per contract. Secondly, we also saw a decline of 3.19% with cashew, losing 1,318 naira in the contract value to close the contract value for the week at 40,000 naira. And lastly, we have paddy rice, speaking about commodities now, which lost just 1.56%, losing 308 naira to close the contract value at 19,392 naira. The only other asset under consideration for the week would be the fair trade exchange traded commodity, which is the FETC, which gained 2.21%, gaining 300 naira in the contract value to close the contract value at 14,235 naira per contract. And that's essentially the summary of every single thing that happened on the exchange in the week under review. And as we always say, if you want to know more about the commodities market, you can always go to our website, which is www.afexnigeria.com. And if you also want to get involved trading commodities, you can always download the COMEX app on the Apple and Google Play Store.
All right, Michael, let's dig a little deeper. Now, I noticed that the trade volumes have been declining on the exchange. Is there any particular reason for that?
Laddie, thank you for that question. And to be honest, the simplest answer would be to say nothing goes up forever. But the truth is actually when you're dealing with the commodities market, there's a fair bit of seasonality that you have to contend with from time to time. And that means that there are certain periods of time where you're going to see peak market activity, where you see a lot of buying and selling. And then there are also some period of time whereby you see little to no volume being traded in the market. And that sort of fades into what usually happens on the exchange too. But like I said, it's as easy as saying nothing goes up forever.
All right, well, the Monetary Policy Committee has held the interest rate at 11.5%. Is there any relationship between the interest rate and the commodities market?
Theoretically, there is. If you look at more advanced economies and if you look at more advanced commodities market, like the ones that they have in the United States, where they have the stock market, the fixed income market, and then more generally the derivatives market, the interest rates sort of underscored the asset pricing of every financial asset, right? And that's what you see play out in all those advanced economies. However, in a country like Nigeria, we don't currently have that robust infrastructure in place. We don't currently have that derivatives market. We will get there, but we're not currently there. So, like I said earlier, theoretically there is, but with regards to a market like Nigeria's, there really isn't, if we're being completely honest.
All right, so we're almost near the end of the first quarter of 2021. What is your outlook for the commodities market for the rest of the year?
So, I mean, I believe we've spoken a bit about this over the course of the past few weeks. So the general trend is for you to see demand overshadow supply, which, of course, would expectedly cause price to trend upwards over a long period of time. But speaking more broadly about the commodities market, I think for the second quarter of the year, the major focus of both governments and private institutions and every single other player within the value chain in the agricultural sector is about increasing the production value chain and see how we can increase those numbers. So some of the government policies that you have seen come out in recent weeks and that you would see come out in the second quarter of the year would be more focused on increasing the production numbers and increasing the production value chain. And then you also see some activities by certain companies like the NSIA with regards to providing inputs, quality inputs to farmers, and also providing access to financing for farmers and all of that, which my colleague would speak to further on in this discussion. But like I said, a lot of the focus in the second quarter of the year would be to increase the production value chain such that when you have harvest period, you can actually see the prices of these commodities actually fall so that they're cheap enough for private organizations and private institutions and companies to buy, so that their cost of production drops significantly. Outside of that, you might see prices skyrocketing in the commodities market.
All right, Michael, thank you so much for, as usual, taking us through activities in the market. But like you mentioned, your colleague is here, so the commodities market in Nigeria is evolving and have started attracting financing from a variety of players, including the capital market, increasing the flow of credit and finance to vital sectors like the agriculture sector in Nigeria. Mr. Yusuf Ogumbi, the investment manager at AFEX, talks to us on that. Good morning, Mr. Ogumbi. Good morning and welcome to the show.
Good morning.
Okay,
Good morning.
so what has made financing to agriculture, why does it seem so difficult, especially for financial institutions?
Yeah, thank you. If you look at the space where we are in, the commodities market and broadly the agriculture market, you would see that there are a number of bottlenecks. So the first one is the administrative bottleneck. So you have capital market institutions, financial institutions, not being able to approach this market because of the administrative bottlenecks they might face. The second one is a huge fragmentation of players in the market. So if you look at the farmers, you look at the traders, you look at pretty much every segment in this market is huge, highly fragmented. And the last one is transparency. So you are going into a market, you are providing financing, you want to see what you are financing, you want to be able to evaluate, you want to be able to have oversight over the kind of financing you are providing to these partners. So at the end of the day, you are faced with a situation where these bottlenecks exist.
Okay,
yeah.
What is now changing in the landscape that's making it possible for capital market players to want to get into this sector?
Oh, a number of things. Like I mentioned, the bottlenecks are there and companies are beginning to get innovative around these bottlenecks. So take, for instance, AFEX provides a huge infrastructure in this space, and that's one thing that is being leveraged on. So you now have administrative bottlenecks being limited, you now have transparency issues being limited, and now people are now able to extend financing to farmers, they're able to extend financing to companies leveraging on the infrastructure that AFEX has provided. a number of other innovations are in the sector vis-a-vis technology that is being provided by players in the sector, for instance, AFEX in this case. And these are infrastructure that financial partners are able to leverage on. So if you look at these infrastructural possibilities that are being provided now, that means that financial partners can have oversight over what they are financing. The administrative issues with farmers, the fragmentation is being reduced as there's some aggregation of farmers into clusters, into cooperatives, and that drops the cost of providing financing into this sector overall. And at the end of the day, it makes it possible for financial partners, capital market operators to come into this space as well.
All right, so, well, thank God for the bottlenecks that are being dealt with. So where are the most interesting opportunities in the commodities value chain that the capital market should be paying attention to at this time?
So there are a number of opportunities, right, in the sector, and you would, depending on the objectives of the partner that is coming into the space, whether long-term, short-term, whether you want to play in the farmer space where you're able to structure financing to farmers, loans to farmers, and leveraging on the infrastructure that we provide. The oversight is there, the transparency is there, the cost of administration is significantly dropped. So there are a number of opportunities, and if you look at the farmer input financing program that we have been anchoring for more than 5 years now, it provides short-term opportunity for capital market operators, typically over a period of time, 270 days maximum. And then that means that capital operators are able to invest against these instruments over 270 days and then make money at the end of the day and exit the market. And that runs continuously year after year. So the market is huge, very huge. If you look at total credit to agriculture sector, it's just around 5% of total credit in the country, and that still leaves a deficit of around, based on our estimations, it leaves a deficit of about 2.4 trillion naira on an estimated total size of 3 trillion naira for the market. So that means that there's huge opportunity in this space, and year after year, there's always that opportunity. Also for the long-term players, there's that opportunity as well in financing structures around establishing plantations, and that offers some other opportunities for capital market operators as well.
All right, what kind of products have been launched into the exchange to actually attract the capital market players?
A number of products, actually. A number of products ranging from allows you to finance farmers. 270 days, like I mentioned, you're able to provide financing to farmers. You're able to help cover the production gap that they have, financing for production that they typically have. And that means that you provide that financing after 270 days, the instrument matures. There's this other instrument that was issued last year, the asset-backed commercial paper, that typically applies to the processors where they provide commercial paper is issued to finance some of their inventory, and the whole structure is triggered. So a number of instruments have been issued on the exchange, input notes, like I mentioned, which finances farmers. And if you look at the way we've been able to run the structure over the period of time we have been operating these instruments, that means that because of the infrastructure possibilities we've provided, technology oversight that has been provided, it allows us to monitor this process end-to-end in a much more structured way. And the level of default rates have been massively low, very low. The last instrument that was issued was around 99% repayment rate. That means that it's pretty much the perceived risk that you typically expect in that space is very low. And based on this structure, you can even minimize it further.
All right. Thank you so much, Mr. Ogumbi. Mr. Yusuf Ogumbi is investment manager at AFEX.
Thank you.
And he was telling us some of the activities about attracting capital into the agriculture sector. Well, we'll just take a moment and we'll be right back. Well, we're now going to the equities market now, where